Hello everyone, my name's Chris Granary from EOS Property Group. Welcome along to our little YouTube video. Folks, today I want to speak a little bit about our 33 Windsor Street project, which is the latest of our Armchair Developer concepts. Now, for those that don't know about our Armchair Developer project, we have a number of videos on YouTube that you can look through, and they'll explain the concept and the process behind it. But for the purpose of this video, I really want to just focus on this particular project. So if you're unsure of how the developer project works, jump back and have a look at the videos, or give us a ring or flick us an email and we can explain it to you in some detail. Essentially, just very briefly, what we do is, over a number of years, we've been looking at investing in property, getting our clients into higher quality investment properties at the best possible price. And over the last 4 or 5 years, as you've been aware with the slowdown in properties capital growth, we've looked at alternative ways to do it. And we've come across this project, developed this concept of Armchair Developer, whereby we organise some investors. They come along, we do a feasibility on a project, and they, for all intents and purposes, become the developer and make the developer's profit, which is at least 20% on the deal. So we know, for example, we can build a unit for perhaps $300,000, and we know before we start that a unit identical to this is worth $400,000. Therefore, there's $100,000 capital gain for the investor. Therefore, we're prepared to move ahead. So the Armchair Developer project allows just that. It allows we do the work on behalf of the individual investor, and they make the developer's profit. And this usually we have, say, if there's 8 or 10 units, we have 8 or 10 investors, so they all walk away with the unit themselves at the end of the project. So let me talk specifically about this latest one. It's in 33 Windsor Street in Perth, and you can see there's an artist's impression of it there. It's a lovely tree-lined street, very nice little development. It'll be 2 stories, what they call 2-story walk-up, 4 units downstairs, 8 units upstairs. Now, to be specific, the site's already zoned R60, which means we aren't looking to get rezoned. We actually have the correct zoning to do what we wish to do. We'll build 10 2-bedroom, 2-bathroom units with 1 car space, and 2 1-bedroom, 1-bathroom apartments with 1 car space each. It's available for vacant possession, so the first step for us is to go towards getting development approval. There's no other hiccups along the way. What makes it particularly appealing, and I'm sure you'll agree if you know Perth, is its location. And you can see there on the map, on the little plan there, it's about approximately 2 kilometres from the centre of Perth. And for those that know Perth very well, you'll know that Claysbrook Cove area has been that East Perth development. And that's been a spectacular success over the last 7 to 8 years. Most of the apartments in there now would probably go for at least $1 million. They've taken an old beaten up area and made a spectacular development site out of it. Very, very impressive development all around that Plain Street, Claysbrook Grove area. And there's quite a number of opportunities for work in the area. There's some commercial and some executive offices, those sort of places. If you run down Lord Street, which is the street that runs past our development site, it hits, in fact, at Royal Perth Hospital. And if you turn left, of course, you're in the city of the centre itself. Now, over here on the left is West Perth, and this has been the focus for much of the growth in Perth recently, mainly due to the junior mining companies moving to WA to establish headquarters for the developers in the northwest. And so it's full of lawyers, and it's always had surgeons and specialists in there. It's now full of junior mining operators. And so all the commercial premises are all fully leased. The leases have gone through the roof. And at the same time, the people that work in these sites have been searching for accommodation nearby. And so the West Perth prices have gone through the roof. The adjoining suburb Subiaco has pushed up very high. Leederville's on the move. Certainly East Perth has always been expensive and continues to go up in value. And so the next enclave we believe will probably be that North Perth area. So to give you an example, and the rent's somewhat surprising, the rent for a 2x2 in West Perth, probably around $900. The rent for a 2 between Perth City and East Perth, around there if not more, where we can still get properties in here that are renting for perhaps $600, $550, maybe $750 with the furnished packages. So we think there's some opportunity there for some capital growth and for some significant rent returns. And certainly vacancy rates in the city are very, very low, down about 1.7, 1.9%. So therefore a huge demand for accommodation. Now also we have this area here called Northbridge, which is the central focus for nightlife. It's got restaurants, cappuccino strips, and all the nightclubs. And up Beaufort Street on the left-hand side here, there's another growing restaurant area. Probably there's the 5 most famous coffee shops in Perth. We're up along Beaufort Street now. Of course, you've got the river here. You've got the Graham Farmer Freeway across to the developments over here, which are going to be the large casino complex. So it's a very, very, very central location. But what makes it particularly appealing is that you imagine those central locations tend to be very, very busy, to have lots of development in them. And this is a little backwater. It's right smack in the middle of the city, quite unusual. So the 2 streets, Windsor and the one next to it, look like this. They're little tree-lined streets with old houses in them. And it's made it particularly appealing. Typically when we get these developments, in order to get the correct zoning, you have to go on a major street, because that's the only place the council will allow high-rise development. But interestingly enough, this seems to be, well, because it's in the Perth postcode, the R60 zoning is already there. And so it makes this street particularly appealing. It hasn't been developed. It cannot be developed more than about 2 stories. And it's still got that lovely aspect. This is a view of the actual site itself. Those trees will have to remain throughout development. And you'll see on the left-hand side, there's this red brick development. That's a 3x2 set of townhouses. I think there's 6 there. And that will give you a feel for what we'll be doing, the same height, the same sort of brickwork. And on the right-hand side here, there's an old house. That has been bought by developers. That will be bowled over. And we think they will put something similar to us, or similar to this 3x2 townhouse arrangement on the left-hand side there. But that gives you a feel of the site. You can see not very exciting. Don't feel too bad about knocking over the old house that's there, but that gives you an indication of what it's going to look like in the end. And here's the artist's impression. Now, these 2 ground floor units there and the one next door, I believe this wall will be covered in. There'll be quite a large courtyard in the back there, and the plans have changed, so I'll show those in a second. There'll be a bit more of a courtyard here, and in fact there'll be 2 balconies across this overhang. So there's 2 downstairs units. And at the very back of this site, there's 2 more downstairs units that are 1-bedders. And across the top through here, they're all 2x2s. Here we have a more elaborate floor plan. And you can see here the 2 2x2 bedroom units and the little 1-bedders at the back. Actually, we've made some slight changes to these floor plans, and I think they've been vastly improved. But the general layout remains the same. Upstairs, you can see they're all 2x2 units. So 2 at the front, 2 at the back, and then 4 in the middle here, surrounded by this void, and there's balcony section through the middle. Obviously, it would have been nice to put balconies on the outside edge, but it causes setback problems and privacy issues for the neighbours, so we're unable to do that. Now, that's all very well, that's the site, but the question, of course, for the investors is, they all handball the development problems and the development issues over to a development manager. It's his job to run the entire arrangement so that our investors don't need to be development managers. They don't need to be experts in the field. We'll get someone else to do that job on their behalf. And we're recommending Bird Property Group. They're working on 7 other sites for us. We're very, very pleased with their work. We'd certainly recommend them. Terry Pilbeam and Matt Bird have probably got 40 to 50 years experience in property development between them, and they have been excellent so far. So we believe they'll be an ideal choice to run the property development management for this site. The next question, of course, is who will build it? Well, at this stage, we have got a couple of favoured builders, but in reality, at the time when construction's up, when we need to choose a builder, we'll look for 4 or 5 builders that meet our criteria. And the criteria is obviously experience. But it's not just, oh, we've been building for 30 years. They've got to have experience in building our sort of developments. So we don't want a residential builder. We don't want a high-rise builder. We want a builder who builds typically 2, 3, 4-storey walk-ups. So their skills and abilities lie precisely in the sorts of construction that we're doing. Obviously, the builder has to have a certain size and stability. You don't want a guy that's just starting out. You don't want a guy that's overstretched and doing 15 developments and he can just barely keep up with the pace. So we're very, very thoughtful, very, very careful about have they got the capacity to easily meet our requirements. Of course, they must meet our prices and they must be prepared to sign fixed price contracts, and they must be able to demonstrate that they can meet the timelines and sign contracts where there's penalties to them if they go beyond the timelines. These are the factors we will consider. And once we've chosen 4 or 5 we think will meet that criteria, we'll then put our plans out to tender to that group, and they can come back with their best prices and their best arrangements to get in for completing the project. We'll then choose from there. Now, the other thing is, if you complete these projects, what will they rent for? What would a 2x2 identical to the floor plans that we're developing rent for in Perth right now? Well, we've asked a number of agents, and here's some examples here. You can see the first one. they believe that a 2-bedroom, 2-bathroom apartment, and we've shown them our plan, so there's not as if we're showing, we're asking what's a great big 2x2 worth, and we've got small 2x2s or vice versa. They're suggesting that a 2x2 unfinished will be between $550 and $600 right now. We suspect, of course, will be worth more in 12 months' time. And a finished one, if you're prepared to put a high quality furniture package in, because the sort of tenants we'll be looking for will be high quality tenants. They'll be young executives expecting high quality accommodation. But as a result of that, they'll pay up to $800 per week. Now for the one bedders, $450 to $500 per week, and with the furniture package, I don't believe it'll cost you $25,000 for the one bedder furniture package, because there's less to provide, obviously, and the rents will be up to $700 per week. So significant returns. The other question for you is, what are these units worth? What can I sell them for at the end if I choose to sell? Well, we reckoned about $520 for the 2x2, and we reckoned about $385 for the 1x1. But of course, you can't really make a decision based on what we think. So we've gone and got some formal valuations from a very respected valuer in Perth. The formal valuation on the 2x2, and again we showed him the plan, so he's able to make a valuation based on the floor plans that we're providing. The formal value is at $525 for the 2x2, and surprisingly, the one better they valued at $430. We were so surprised at $430 for one better. We checked that with a couple of the local agents, and they said to us, "Look, guys, if you can provide to us 1x1s, we will sell them within 24 hours at $430,000." So, very interesting market currently in Perth. So here are the numbers, and it breaks down, for those that know how the Armchair project works, it breaks down into two halves. The first half is the initial deposit, and that's provided by the individual investors, and that buys the land outright in the name of the joint venture. So the 138 in this case, is funds provided from external sources. So an investor has to have a line of credit from somewhere else, or pocket money saved up, or equity in his own home, and they can write a cheque for $138,500. They do that, that's the only outlay initially, and that begins the project. The joint venture borrows the funds to do the construction, not the individual, but at the very end of the project, in 18 months' time, that's when they need to provide the final $287, and they can borrow those funds against the actual apartment itself. So that whilst they provide the 138 up front from somewhere else, they can borrow the 287 using the apartment as collateral. So the total outlay at the end is $426, and as you saw, the estimated market value based on a formal valuation was $525. Once from the other, gives you an estimated capital gain of $99,000. Now the rent returns 575 up to 755, which, working on a percentage base, is 7 to 8.7%. A spectacular return, I think you'll agree, for buying a brand new apartment in such a great location. And for those that are interested in percentages, the return on equity is 71%, meaning you put in 138, you'll get $99,000 back, which is a 71% return on your outlay. So these are the calculations you might want to do if you intend to sell the project as soon as you take ownership. So you'd make $99,000 on your outlay, $138. Or the developer's profit in this case is 23%. Now in all our developments, where that's the sort of numbers we're looking at, we want to make sure our investors get at least 20% development profit. So if the total cost to you is $426, the final market value is $523, you're already 20% or above in advance of where you would be had you bought the property outright. Now for the one better, whilst the numbers are a little different, the percentage of returns are very, very similar. So the initial outlay is $114, the total construction is $236, giving you a total cost of $350 for the one better unit. It's currently valued at $430, as you saw, gives you an $80,000 profit. Rent returns are as they are, and it's between 7 and 9%, depends on furniture unfurnished. And the return on equity and the development profit are the same, very similar to the two better. All right. Now we did some calculations, and you really need to do these for yourselves. This is a bit generic and a bit general, but we took a person on an income of $70,000 a year, so we know where the tax advantages or disadvantages are. We imagine you borrowed the money at 6.3%, and we imagine you'd borrowed it all, like you hadn't had cash involved whatsoever. At 6.3 now, certainly you can probably perhaps be able to borrow your money at about 5.6, 5.8, but let's work on 6.3. And and we did the 2x2s, if it was unfinished and you got $575, you'd be roughly $28 a week positive on the deal. So you go and buy a $500,000 apartment for $400,000, and you're also making $28 a week on the deal. Now, look, that would change depending on your own personal circumstances, but it gives you a feel for it anyway. And of course, as you can see, for the two-bedder, the same scenario, but furnished, and that includes an extra $25,000 for the furniture package. You'd be about 130-ish a week positive. So that's one of the reasons that we're so excited about this armchair developer concept. It allows our investors to buy a spectacular property in a brilliant location, brand spanking new, and still be cash flow positive. And that is a fairly difficult ask in almost all environments in Australia, and certainly in capital cities. So in summary, we think there's some real advantages in this concept. Generally speaking, the armchair development provides well-located investment properties, and that's the criteria we use. Regardless of the profit margin for a developer, what we want to know is this a good investment in its own right? Is this a good locale? If we were paying top dollar, if we were paying market value even, would it be a good investment? If the answer is yes, then that's the first hurdle to overcome. We then look forward. We're able, of course, to purchase the property for well below market value, at least 20%. We are able to, generally speaking, produce properties that are cash flow positive, but certainly cash flow neutral. And what makes it very, very interesting is, upon completing the purchase of this property, you have a property with instant equity, and you have a property that's giving you a bigger cash return than you're putting in. So your borrowing capacity is actually improved. You've got a higher income because your rent's coming in, and you've got more equity. So you're in a better position to borrow than ever before, as opposed to the normal way to do it, where when you usually buy a property, there's usually negative equity in it, of course, because you've paid stamp duty and other bits and pieces, and usually a cash flow negative, cash flow short. So that's got some significant advantage. And of course, with this one, the location is particularly appealing. There's roughly $100,000 capital gain, and it's significantly cash flow positive. So what next? What's the timelines on this process? The development manager, Matt Bird's, produced what he calls an information memorandum, which is a 13-page document full of all the details, all the specifics about the projects, the risk profiles, the requirements, the issues, and you're most welcome to have a look at that. Just flick us an email and we'll send you through the information memorandum. To double check yourself and just make everyone happy, we ask everyone to ring Brad Blacksell. Now, he's the broker in charge of organising the construction finance, and what Brad needs to know and needs to be comfortable with is that all the investors that are going to become involved have sufficient financial capacity not only to provide the original deposit, but also to take ownership at the end. So on the completion of the project, that your income's okay and that your borrowing capacity will be sufficient so that you can pay the last remaining construction finance and take ownership of the project yourself. So it's important that Brad understands that, and it's important for you to know that each of the other investors has also gone through the same process, and therefore they have been financially approved, for want of a better word, also. So that's an aspect you need to consider. And then if you're prepared to go ahead at that stage, you feel an expression of interest, select a unit, and then we take it away from there. Now folks, that's been fairly brief and fairly rushed, and I apologise for that. And you obviously would require some more details, so please give us a ring, have a yarn to us either generally about the armchair developer concept or specifically about this Windsor Street project. I must let you know that there is quite a few people hunting these, so I would urge you to take as much time as you need to make a decision, but when you make the decision, please act quickly. Contact Derek or myself, our contact details are there. Jump on our website and have a look at the project. Talk to Brad Blacksell if you wish to do so. Have a yarn to him about not only your finances, but you can talk generally about financing. He's a very well-respected finance broker. He'll talk to you about the projects and the previous projects. Have a yarn to Brad. And we would urge you to consider this project. We think it's a ripper. We don't think it'll last much longer. But please contact us and have a yarn. I hope I've answered all your questions. And thank you for listening. I hope to talk to you soon. Bye for now.